Okay, hello everyone here, Chris Capre, founder of Second Skies. Thank you for coming to the weather report with FX Street and Second Skies Forex. So this is a class on Ichimoku Cloud trading. Just to let all of you know, in case you did not hear the news flash, that this class will be recorded. So we all must be on our best behavior, except myself. And what that means is that if we can keep the questions focused to the material and the subject that we're discussing, that would be great. So just to keep our questions focused on material, I do want to thank you all for coming. It's good to have you all here. And so before we begin, I do invite questions. I encourage questions. I want this to be an active, open process for everybody. Some of this material will be new, some of it will not. And speaking of that, is there anybody here that this is your first time taking this class? Anybody here that has never taken an Ichimoku Cloud class or weather report class, or never seen anything on Ichimoku Clouds before? I can see a lot of the names here are familiar. A lot of you have been working with for a long time. It's good to have you all returning. Thank you for coming. This class has been going on for 2 years now. And Darren's saying this is his first class. Fantastic. All right, welcome, Darren. Good to have you here. And anyone else here that this is your first class at all? If so, it's great to have you here. So, Gad. Okay, saying yes, fantastic. Mao, second class. All right, great. Fantastic, good. All right, so we have a decent number of people here that's your first time. All right, well, welcome. Thanks for coming. Okay, so more people are coming in. And we are going to go ahead with the material. So for those of you unfamiliar, for those of you new with this, the Ichimoku Cloud is a trending and momentum type indicator, but it's not. I wouldn't label it as an indicator. I'd label it a method. It's a full-on trading method. The original work on the Ichimoku Cloud, the original piece, was done over 40 years ago, and it was over 1,000 pages, over 4 volumes. There's never been to date a single indicator that was released in the currency markets where its introductory piece of work that was delivered to the world was that many pages, a couple hundred pages, 300, 400, fine. It was 1,000, so it was a massive piece of work, and that's because it really isn't an indicator. It's a full-on method. There are people that just trade Ichimoku for everything, for timing, support, resistance, cycles, trends, when to get in, when to get out. It has all the weapons to be its own method. And the more you get developed with that, the more you can see for yourself that it does have that capacity. So that is what we're teaching here today. However, we are not teaching the full 1,000 pages worth of material. That would be a very long class. We only have about 50 minutes to squeeze in what we can. So today I'm going to focus on the main signal, the Tenkan Kijun cross, and we'll dabble into some Kumo breaks today, which is another one of my favorite signals. But the Tenkan Kijun cross is the marquee signal. It's the marquee signal because it's kind of the easiest. It translates the best into European and Western languages in terms of other signals, because it resembles a signal that is very similar in the Western and European trading world. A lot of people are use moving average crossovers or MACD crossovers, or some sort of crossover of that type of one level over another. That's the focus of the Tenkan Kijun signal. The Tenkan Kijun signal is really trying to get you involved in a trend move. It's trying to get you in a move that's going to go for a little bit, not something that is going to just grab a few pips and be done. That's not the goal of Ichimoku Cloud trading. It wants to get you into a large move for whatever time frame you're working on, and keep you in that move so that you can get at least 80% of that move. The average time it takes for those moves to happen on whatever time frame you're working with can be anywhere from 3 to 30 bars. So there's a general time frame that and cycle that those signals go through, and this is no exception with them. So to talk about a pair, we're going to talk about probably one of the marquee trenders in 2009, which is the year we're in now. And Aussie dollar, it's been the one that's really outperformed most of the league out there. And so, not the League of Shadows, but the League of Currencies. So it's performed better and better, and partially, than most of them out there, mostly because it has been the first to really go into an interest rate increasing cycle. And so, because of the yield differential between the Aussie and the U.S. dollar, and with the U.S. dollar, continued keeping it low, and then most recently claiming, hey, we're going to keep our rates low for exceptionally long time, that really just gave traders the go-ahead to pile into Aussie U.S. dollars, knowing that they would probably gain from that yield differential for a fair amount of time. And so, with that being said, that's exactly what's happened. The last Tenkan Kijun cross signal we had was in this region here. The Tenkan is this white line here. This red line is the Kijun line. This is akin to a 9-period moving average, but it's a little bit different. It incorporates the highs and the lows over the last 9 periods, divides them in half, and there's your value. So that's the Tenkan period. It's the shorter of the moving average lines, or similar moving averages. It's like a price action line. This Tenkan line, which in Ichimoku terms is generally referred to as the trend line or Kijun line. And so as long as price action is above this and the line is climbing, you're generally inside a trend. And that's exactly what's happened. So when your shorter, more nimble line crosses upward above the trend line, that generally indicates that the price action is shifted in a balance to where actually an imbalance. It's actually become imbalanced to where it's being pulled by price upwards in one direction, in this case upwards. It's being pulled, and the Tenkan line is highlighting that. And so that's what we had. We had this crossover around the 8100 region, and since then we have not had a crossover since then. So if you were trading off of the daily Ichimoku Cloud and the Tenkan Kijun cross signal, you right now would be long at around 8100, and here we are 92, 98, roughly 9600, 1200 pips later. So that one trade would have netted you 1200 pips. That's the potency of the Tenkan Kijun cross. It's designed to get you in a trade and keep you in a trade until there is really enough momentum shift on the other side of the market for you to no longer be in it. So that's the basis of the Tenkan Kijun cross signal. Now, before I get into other examples of this and show you how I like to use it, I want to use the Australian dollar as a case study. So we've kind of talked about how it's been in a trend for a long period of time. If you notice, every time it gets close to the Kijun, it really isn't able to maintain a position below it. Sometimes you use the 20 EMA as support, sometimes it bounces off the Kijun. Did the same thing here. We had probably the greatest threat to the Kijun here in a long time because the Kijun was flat here, it wasn't gaining anything, whereas here it was still climbing a little bit. But we had a couple interesting probes here before, and then same thing here most recently. The bottom line is that the Kijun held. We actually didn't have one close below it, and the deepest foray that we had beyond the Kijun was a whopping 45, 50 pips, only for price action to strongly reject off of it and close well over 50 pips above that. Since then, the Kijun has been nothing but bullish, or the price action has been nothing but bullish, only posting 2 red candles in 6.5. We're in a half candle right now. We're not done. Assuming this one ends up blue, it will only post 2 red candles and 5 blue. That shows you that the potency of the Kijun as a support or resistance in a particular trend, in this case supporting the upside. So why am I talking about the Aussie US dollar? Well, so partially because it is still in a trend, and also because the Kumo formation is kind of showing a similar formation that it had earlier. The only difference is that if you look at this little region right here, let me delete these lines. From this section to this section, the little dip and then the movement up. We have a similar section here where we have this little dip and then the movement up, also with the flat bottom during that same section. The only difference is that this time it used the Kumo as support, which is what it's generally designed to represent as support and resistance. So if you're above it, this thing should act as support. The Kumo has been climbing consistently for a long period of time. Price has been above it for a long period of time. So this is a well-established trend, something that we don't want to be trading against. And so with that being said, we are still in this trend. We're still above the Kijun. We have no breaks. Everything is all green lights. We really just have this one level to eclipse, and any daily close above this will suggest that there really isn't anything in the way until some of the highs of 2008. So looking at this over a longer perspective, if you checked out my blog on my website, I've written about this. We only have a few hurdles left before we start getting towards parity. But everything on the Kijun here suggests it's all bullish. And so with that being the case, what do we want to look for when you are in a trending environment? When you're in a trending environment, you want to look for intraday signals that further support that trend or that are in the direction of that trend. If it's a trending environment upward, it's clearly trending upward, we don't want to be looking for shorts in this case. We want to be looking for longs in the same direction of the trend because we don't want to fight the flow of the traffic. It would be like living in downtown New York, Manhattan, and there is a one-way street and you're deciding to drive against it. The only difference is in the currency world, it's a little bit different. The cars are much bigger. There's a lot more money, so you have no influence on the road whatsoever. You or I have no influence on the road. Maybe when we throw 100 million in the market, we might have a little bit of influence, but even then, probably limited. So unless you're trading during a completely non-liquidity time, maybe between, the New York and Tokyo Open, someone in New Zealand opens or something like that, you may have an influence if you throw 100 million in, but other than that, you're not going to. So with that being said, we look for intraday trading opportunities in the direction of the trend that also have a similar type of signal. So, okay. So that's what we look for. We look for intraday trending opportunities. And so one of the really good intraday time frames to be trading Ichimoku is the 2-hour. My favorites are the 30-minute and 2-hour, 30 minutes and 1 hour. It produced a Tenkan Kijun cross here about 90.75 and just exit out of it about 92.75, 200 pips later. Price action has gone corrective since then, and we're on the verge of producing another signal. So we have an intraday signal that's in complete alignment with the daily signal. That's what we're looking for. We want those. The only time we take intraday signals that are against the alignment of the daily signals, unless they're incredibly convincing. They need kind of two signals to line up. We'll talk about that later. Fat KO has a question here. Do you trade on bank holidays? Depends. It depends on the type of holiday. It depends on which session is having the holiday. If it's a Tokyo holiday, it's not going to have as much of an impact on the market. The majority of time, I'd say 3 out of 4 times, I'm not trading on a bank holiday. But it depends on where it's happening. Who's the bank holiday? In terms of tomorrow, would I be trading on that? I probably wouldn't be too excited to initiate too many signals tomorrow, but I'd also have to see how the price action goes. If the price action looks hefty enough, absolutely, I'll take it. Just because it's a bank holiday doesn't mean I don't trade. It's a matter of context. I need to see how is price action moving. Is it solid enough? Is the direction consistent enough? And, is it really worth it? So it's all really about context. Sometimes yes, not always. Majority of time, more towards no. Asha has a question. What do you do when trend reversed like 200 pips? It's a very interesting question. When the trend reverses like 200 pips, are you talking like Aussie US dollar? Because Aussie US dollar, that 200 pips is minor in comparison to the larger trend that's in play. Mind you, we've been above the Kumo. And going back for a second, we've been above the Kumo since 67. So you're talking 2,600 pips. So a 200 pip reversal is very simply, less than 10% of that entire move. That's not that big a deal to me. So, to me, that's not that big a deal. But there's another way to answer your question. And the way I would answer your question using the Ichimoku Cloud to be, well, according to the Ichimoku Cloud, has it violated any of the patterns which would suggest that the trend is over? Has it broken on the other side of the Kumo? The Aussie dollar hasn't. It hasn't broken on the other side of the Kumo. So my answer would be no. That, or at least according to Ichimoku analysis, criteria number one would be no. The second would be, has it really changed the structure? As you can see, the structure, since it's been above the Kijun, has been relatively stable above the Kijun. So has it disrupted that structure in relationship to the Ichimoku Cloud? No, it hasn't really disrupted the structure in terms of spending a lot of time below it, using it as resistance, and never resurfacing above it. So 200 pips in the larger context of things is not that big a deal. If you're a day trader, I wouldn't be doing that. I wouldn't be using 200 pips as a stop. Generally not. But if you're trading the longer term trend, 200 pips is nothing. It's like pennies from your account. So, with that being said, to really answer that question, I just need to use the Ichimoku to determine, hey, has this trend been violated? And the answer is no, it hasn't been violated. There's no criteria that has been violated, not one individual piece of data. So hopefully that answers your question there. So here we have the, daily chart. That's pretty stable. So we go down the 1 hour chart, and it also shows the potential for a signal. Has any of the criteria been violated, or the structure been violated? No, we've had minimal time below it here, rose above it. We've had minimal time below it here, above it. The price action hasn't been impulsive to the downside. It's been virtually corrective. There's been no real impulsivity to it. Now it's starting to show, signs of life, Frankenstein style. It's alive. And, the cloud hasn't even been approached. It hasn't even been touched since the 4th of November. So since we haven't even broken or any of the criteria according to the Ichimoku Cloud, the answer is we'd still be looking for intraday signals on this. So this is actually one of them on my hit list. So take note. Now, it's threatening to give a crossover alert possibly before we break resistance. And that's one of the capacities and skill sets of the Ichimoku Cloud. Most people would say, hey, I'm not going to take this until it clears resistance. That's fine. You're welcome to do that. However, the Ichimoku Cloud will get in signals like that. Why? Because it's very good at detecting moves before they happen. It's kind of got its ear to the ground, listening for buffalo. In this case, actually listening for bulls, rumbling on through the plain. So with that being said, since it does have its ear to the ground or its ear to the tracks, it's generally able to detect those movements before it happens. And so there are going to be times where it's going to ask you to get in before you break support and resistance. If you want to wait till support and resistance is cleared, more power to you. But there are many times that you will be asked to get into signals just before they break because it is going to detect that. And so if it does produce a crossover, my suspicion is that this trade will continue on, at least minimally hitting its first target. So for those of you who are new, the first target on a 30-minute time frame is generally 30 pips. On a 1 hour time frame is generally 45 pips. So with that being said, once the crossover happens, in this case, 45 pips from there. Now, for those of you that have been trading Ichimoku or watching this class for a while, what type of crossover is this? And can anybody see anything that has been coming to my classes? Can anybody see any criteria? Oh, it's getting cooler in here already. Very nice. Okay, can anybody see any criteria in here whatsoever that would negate this potential Tenkan Kijun cross signal? Any whatsoever? Can anybody find any? If you can't find any, you're welcome to say, I can't find any. This is not a trick question or anything like that. It's an open format. Okay, nobody has any response to that. That is fine. You all are welcome to stay silent. In America, we have the Fifth Amendment here. CC says no. Jasper says the 20 EMA. The 20 EMA, are you saying the 20 EMA would be something to negate it? Because the 20 EMA is down here, price above it, so that generally supports side movement. Forex Champion was asleep. She says, please repeat the question. Is there anything there that would, inside the charts, that would say we wouldn't want to take this potential tanking Kijun cross? And Eric B is very honest. He says he doesn't know enough. That's cool. You come to enough of these classes and you will know enough. You will know how to execute trades based on this. So it doesn't look, other than Jasper's 20 EMA, which I don't see as a reason to not take the trade, it looks like nobody has any response. I can't find anything there. There's really nothing here that would suggest it. Other than this potential reversal thing right here. Pivots. Ooh, Ashu wants to throw in some pivots. Let's do that. All right, let's throw in some pivots here. The interesting thing, the intriguing thing, is that right where this thing had a high is right where the R1 is. My suspicion is if we break the R1 by a few pips, we're probably going to tag, we're probably going to clear on out. Eileen says, do we consider the Senku Span B? Yeah, absolutely. In fact, Eileen has a great question here. Eileen from Singapore, good to have you here again. In regards to the Kumo, it's the most important thing you consult. So for those of you who don't know, this thing right here is the Kumo. This is the first thing an Ichimoku practitioner consults, beyond anything, is the Kumo. It has so much data in it that Ichimoku practitioners, this is the most important thing you'll ever consult. It represents support and resistance. It tells you strength of the trend, volatility of the trend, where future reversals will be or generally will not be, the potency of a reversal, the weakness of a reversal, the strength of the trend, how much order flow is really behind all that. It just communicates a massive amount of information. So with that being said, you know, we do consult Senku Span B, absolutely. In this case, I can't see any evidence that would say it would negate the trend. So other than Ashu's pivots there, you know, we kind of got, other than the R1, we really don't have anything else that would say this thing isn't going to move further to the upside. Or that if it does create a signal, we wouldn't have a valid signal. So with that being said, in fact, what have we done off the lows? We bounced off of it, and then instead of closing near this pivot again, we rejected off of it and been making higher lows since then. So it shows that the market is rebuilding to the upside. So this is one that I'm going to be watching here. This one is on my hit list. Dan says, what about the flat cloud in the future? Well, the flat cloud doesn't occur, this gray line here. It's a good question. The flat cloud doesn't really occur until the start of London. We're still in the beginning of New York, and we're only trying to minimally get 45 pips. So for us to get 45 pips between now and New York is not a complicated thing. We're not asking too much. We're not asking something that is deviant or out of the normal. And so right now, the flat Kumo is not much an issue because we still haven't even seen a probe into it. Again, remember, flat Kumos are flat tops and bottoms are only really relevant when price is, how could I say, had some previous interactions with the cloud in the recent time or is threatening to have an interaction with the cloud. Right now, it's not threatening to have an interaction with the cloud. There's a good distance from price and the cloud. It hasn't even touched the cloud since the 4th of November. It's the 10th, so we're talking 6 days. So the flat Kumo right now would not mean that much in terms of this potential tanking Kijun cross, especially if it happens in the next half hour, an hour. But in the future, if this thing dilly-dallies and goes sideways and then starts to have penetrations into the cloud, then it's going to have some impact. Why? Because you're kind of within range of the black hole of the Kumo in the flat cloud. We're not there yet. So very good question, though, Din. Okay, so we'll be keeping an eye on this. This one may execute a trade. My suspicion is if it does break this high here and this pivot, it's probably going to start to add a lot of buying, at least short-term buying. I can see a lot of technical short-term buyers coming in at that point. Okay, so that's case study number 1. Case study number 2 that I want to look at is without pivots, and it's the dollar CAD. Similar relationship. Oops, that's the Kiwi dollar. Okay, dollar CAD has really been trying. It's been putting in a serious effort. It's been giving it the old college try, as they say. I'm guessing they only say that here in America. So it's been really trying, but it really has been stymied and stifled by the Kumo. Remember, the Kumo acts as support and resistance. So if the Kumo's above it, it's going to act as resistance. It's exactly what's happened in every upside attempt. Every upside attempt, regardless of where the lines are, price has run into the Kumo and just not been able to do much of it. This time it was its best chance to really break it. It had closes right at the Kumo, suggesting that there was some pressure on it at that time, but the Kumo was just too much for it, which is kind of surprising to some degree because we had a very, very thin Kumo. This little wing right here was kind of a window and probably one of its better opportunities. There's still a few days left, about a week from today. I think we'll have an answer. If we don't get a break above the Kumo here by then my suspicion is that it'll probably find a little bit downside pressure and then oscillate between 109 and 102 for the rest of November, with liquidity drying out, coming towards Turkey Day. So with it rejecting off of the Kumo and then completely getting eclipsed by these two lines, a daily close below the Kijun would be very bearish for this pair, technically bearish. Beyond that, I would only see a fib level, and if anybody read my article on my website about this, other than this fib level here at the 104.60, and then this region right over here, this 103.90 region. Beyond that, you're talking, basically your downside is 102.70 and 102. So that's what I'm seeing for this. If it cannot close above the Kijun and it continues to close down, it rejected right off the 20 MA and has been really bearish since the reversal started. We've only posted 2 blue candles and 3, 4, 5. 2 out of 7 basically. So with all that being said, it's not looking good for the dollar CAD. It had its best shot right here. The bears were weakened and it couldn't put it away. So it's got another weekend, then after that I don't suspect it's going to be above 109 for the rest of the year if it can't do it by the 17th of November. And that's the potency of the Ichimoku Cloud. It's very good for market timing. It's very good for reversals. There have been many technical analysts that have won awards for their market timing, and they came out of Japan, and what were they using? They were using the Ichimoku Cloud. They were using a couple other things with Ichimoku Cloud, but because they were so good at picking reversals using the Ichimoku Cloud, their market timing was exceptional. The last master of the Ichimoku Cloud, or the person who wrote the most recent Bible of it, recent as in 10 years ago, he recently passed away. So he had won many technical awards for his ability to forecast in the future what price was going to do. So the same thing is kind of happening on the dollar CAD. We have this daily downtrend that's still in play. It's not quite as solid as the Aussie dollar, but it's still in play. And we also have potential signal on the 1-hour chart. In some sense, I like this a little bit better than the Aussie dollar. Why? Why do I like it better? Because the Kumo has more grumba, so it has more strength and thickness to it. So with that being said, if this were to kind of do a mild attack again to the upside, it would probably create a Tenkan Kijun cross to the upside, and then at that point I'd be looking for the Tenkan to cross downward, somewhere between Asia and the early London trading, all the way up to New York trading. So now I can even forecast the time of when the signal would possibly happen. So somewhere between the end of Asia and all the way up to early New York, going into 10 o'clock California time, if a signal had happened like that, then that would probably communicate to me that we're going to begin another leg down, intraday leg down. So something I'd want to be watching in the near future. It would have to fight really hard to really show some bullish claws or some bullish horns here for me to change sentiment on it in the short term. So we see the same structure again. And again, this is also something that's on my hit list. One of the pairs that's been interesting, one of the more interesting pairs to trade in 2009 to me was the Euro Pound. Lately, it's been a little bit more challenging for traders. Why? Because the structure hasn't been clear. We had very, very strong reversal. There was a very, very strong move to the upside, and it was coming very close to 95 pence, and it just wasn't able to do that. Since then, we've been more bearish than bullish. We've been posting a lot more red candles than blue, and we now have our first foray into the Kumo since you're talking mid-August. And you're also talking roughly from the move to 87.94, 700 pips later. So here we are threatening to break this Kumo. The overall outlook, though, is that unless it breaks by this day, the 13th, the structure gets more and more complex. Any ideas as to why it gets more and more complex for those of you that are out there? The picture becomes a little more muddled at that point. So any ideas for those of you who've been trading? The answer is in the upper screen. I'll give you that. So who thinks they have an idea as to why the structure gets more complex? Rising span B. Very good, Eileen. That's exactly it. You have a rising span B, you have a falling span A, which means that your support and resistance zone is going to be thinning tremendously. So with that being said, that makes it a little more complex. It's kind of, with that kind of situation, the Kumo becomes less reliable. And so we, as traders, we like reliability. That's what we're looking for. We're looking for reliability. We're looking for something that has a lot of communication to it, clear communication. And with a falling Senko span B and a rising Senko span B, if price were to empty out below it after the 13th, it may want to gravitate towards the Senko span B, which is climbing. That's generally not what we're looking for. On top of it, this thing gets thinner and thinner. It's going to offer less of an attack for us, or less of a fight. So unless this breaks by the 13th and dumps really heavily, we are less confident of the short-term and medium-term prospects for the euro pound. And so, what was once a really good trade for 2009, I think other than the 13th of November, I think the trade prospects for euro pound diminished immensely. The picture becomes very, very unclear and not too exciting. If it doesn't do it by here, then it has to fight through a roughly 150 pip wide cloud for almost the rest of November. And that means it's got a huge support and resistance zone to work its way through. And I suspect it's going to take a long time. So unless this happens by the 13th, it doesn't become too exciting. So I think for right now, my general recommendation is we're actually not really initiating any euro pound trades until it actually dumps outside the Kumo to the bottom side, or gets really bullish and dumps it to the upside. For us, we're almost done trading the euro pound here, which is fine because we made a ton of pips on it, while this trend was happening. Next on the list here of case studies, euro yen. We haven't talked about yen pairs for a while, and there's a reason for that. We actually did briefly mention it about a month ago. And does anybody remember what we said about euro yen in the last time that we mentioned it? Who here remembers? I remember it, but I just want to see if you remember. Does anybody remember? Oh, the temperature is coming down. Very nice. Very nice. You never want to be too hot in South America. I don't recommend it. Okay. Well, we were staying away from it other than very wide extremes. Why? Ranging. Yeah, Jasper said exactly. It was ranging. How do we know it was ranging? Well, we knew it was ranging because the Kumo was becoming a double agent. It was becoming a double agent that it was, belly side up with the Senko span up, Senko span A up, then Senko span B down, then Senko span A up, then span A down, then up. So the Kumo was acting as a double agent. It was doing that because the pair was oscillating in a very wide range. Anytime it tried to build momentum to one side of the market, it just wasn't able to do it. It would quickly find its way heading in the opposite direction. So, generally, Ichimoku traders say stay away from this. There isn't much of a trading opportunity. And I disagree with traditional Ichimoku theorists in the aspect that there is a clear signal. If we know, what is a clear signal? A clear signal is something that's generally reliable. According to traditional Ichimoku methods, there isn't much of a signal. However, if the Kumo structure stays in place, then that structure is predictable in terms of its outcome. If the structure is predictable, we can trade it. And so if the Kumo structure continues to become a double agent with belly side up, belly side down, and it's relatively contained in the same range, then what that would mean is that the range will probably continue. So far, it's happened 3 times that the range has worked out very well. We've had 3, attempts to break 138.50, yet we haven't had a close. Not one single close has actually happened. The highest close we had on a daily basis was 38.14. So, in my opinion, as long as this Kumo structure stays the same, I'm of the belief that anytime it gets above 138, that represents a good selling opportunity. You have very low risk putting your stops above the high, 39.21, where your first target is around 135, 134. So you got, 100 pip stop roughly, and you got a minimum 300-400 pip target. It's a very good trade there with low risk or low reward to risk, or risk to reward. So the only difference is, does anybody see any difference in the underlying Kumo structure here as of late? There is a subtle difference there. And while you're looking at that, take a look and examine. I'll even make it easier for you. Examine the Kumo from this range to here, here to the end. And I'm going to zoom in just a little bit there for you. See if you can notice the underlying structural difference of the Kumo. It's very subtle, but if you can get it, getting smaller and smaller. Okay, that's true. It is getting smaller and smaller. You're close. You're on the hunt. You're definitely on following the tracks. You're almost there. Din says, regarding the Aussie US dollar, Cloud on 30-minute, is AB are switching and very thin. Senku span A and B. Okay, sorry. Are switching very thin. Can you comment on this? Let me get back to Aussie dollar once I'm finished with Aussie or Euro yen. Din. Eileen says Senku span B is flat. Okay. That's nothing new. The Senku span B has been flat several times. Flat, 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 flat. We'll continue to do it during the market. Eds is saying support and resistance is closely ranged around the cloud. Okay, that's true. Some good answers here. Not the big kahuna I was looking for. Anybody knows any structural subtleties? This is a tough one. At the EQ line, equilibrium line. What's the EQ line? I'm actually saying H, head and shoulders. No, not a head and shoulders. If you remember, I did give you a cue. I was saying the answer is inside the Kumo. So Kumos generally don't do head and shoulders themselves. They just don't create those formations. If you look, the Kumo is, if I was to take the region of the high and the low of the Kumo, remember this is one of my tricks that I do in terms of looking at a ranging environment. Here's the high and low of the Kumo. If I was to draw a line halfway down the middle, the Kumo is actually spending more time chronologically in this region above the midpoint than below the midpoint, which suggests that there is a very subtle change of hands, a kind of behind-the-scenes change of hands towards the upside. If the Kumo is spending more time in the upper half of that channel, the only way it can do that is if more price action is spending time towards the upper portions of the range and the lower portions of the range. So the ceiling has been relatively the same. It hasn't changed. But the floor in price has changed dramatically. This is very tough to find. As you can see, the floor has changed much more dramatically than the ceiling. And so with that, it slowly forced the Kumo to the upside. And what is that suggesting? the bulls are slowly winning this fight. They're kind of using their little termites and nanites to kind of eat away at the bears' little efforts, and that they're just subtly winning this fight. Does that mean I want to be heavily bullish on this? No. I wouldn't consider getting bullish. I mean, this would be a very light bullish move for me here. This I'd play a little bit bigger position here. This I'd feel more comfortable. I feel the most comfortable with. I do like the selling at the top because it's been the most consistent. But, so if you were able to pick up those subtleties about the Kumo, then that might be a possible cue that if this thing does break the ranges, right now, according to Kumo analysis, there's a greater chance that this thing is going to break to the upside than it is to the downside, and break the tie. Okay, one last pair. Pound yen. Pound yen, to me, is threatening to do a very interesting Ichimoku structure because it has a potential play here. It hasn't been able to close above the daily Kumo in quite some time. In fact, the last time it did it was middle of August. Actually, end of August. I digress. So it's been a very long time since it's actually been able to have a close above the Kumo. And even when it was doing that, it was on its way coming down, not moving up. On top of that, we have a very flat Kumo structure here for a fair amount of time. This plays until the 20th of November, this month. So any daily closes above it suggests that it will probably want to use this as a springboard for an attack higher. And if it starts to use this as support, we suspect that it's going to now change hands and the bulls will have temporary control until the 20th of November. If it doesn't make significant upside gains by then we feel that the pound yen will find its way lower and be stuck between 153 and 140. If it can't make significant headway above 153 by the 20th, then we feel support is going to break down for this, and this thing will have a very complex zigzag type, play for pretty much the rest of the year, at least till the middle of December, which really is the rest of the trading year. Beyond the 15th or 16th, there's really no more trading. There is if you want to, but it's generally not that recommended. So I shut off around the 15th or 16th. There's no more trading for me at that point. Ashi wants to know about pound US dollar. I have just enough time for that, so yes, let's take a look at that. I got to end a little bit early. So as I mentioned, I'm here in Uruguay. I have a massage coming up in about 30 minutes from the spa here. Next week, I'll show you some pictures of the place. It's a wonderful place here. I highly recommend. If you get to Uruguay and you get to Colonia, they have a nice 5-star place there. It's wonderful. Beautiful location, nice golf course. If you golf, I do, but just not very well. So I'd rather, I spa very well, but I don't golf very well. Okay. So as I was saying, did I say the 15th to 16th, November, December? 15th and 16th of December is when I stopped trading. So yeah, that's the end of it. That's all the real trading you got. In fact, most hedge funds that I know, like when I worked for the broker, there was a hedge fund in our building. When I went down there on December 6th, they weren't trading. They were playing Sony PlayStation 2. So that's what was happening at that point. Okay, pound US dollar. Pound US dollar, to me right now, is in a very precarious position. Not precarious. Strange would be the word. It has been immensely bullish since this bottom here. But the structure, the overall structure, has been just really weird. We had highs, and then we broke out, and it looked like it was going to go for a run, and then it broke back in the structure, and then it sunk down, and then it looked like it was going to break down, and then it started to come back up. So the overall theme that's playing itself is a really wide range between 70.50 and 5,700 here. So you're talking roughly 1,300 pip range. To me, those are the only real interesting plays in pound US dollar right now. The fact that it has broken above these levels here, if it can close above this on a daily basis today, then my suspicion is it's going to want to gun for 70.50. But the Kumo structure is just really awful. It suggests complexity. There's nothing yet that's building heavily on one side or the other. So Kumo structure really just isn't that exciting. There's no signals. on the daily chart. We had a sell signal back here, which resulted in about an 800 pip move. But since then, it's been building more to the upside. The 20 EMA has been holding it consistently. It continues to gain ground. This thing is being pulled to the upside. Any closes above, again, 67.50 suggests that 70.50 will be under attack. But this Kumo is not very pretty. It's not something that you want to write home to mama about. It's not something that you want to bet the farm on, in my opinion. Until we break these wider ranges, I'm going to take small daily trades only on pound US dollar. Kumo structure is not that exciting. Even when I switch to smaller time frames, it's never been that pretty. It's been too inconsistent. Okay, I have enough time to go over the hit list really briefly. I wonder if the euro dollar activated. It might have. Dun, dun, dun. Looks like the euro dollar activated. It's very, very close. Right about current price. So the Kumo structure is very nice. What would be the cancel to this? The cancel to this would be 49.15. If we see a close below 49.15, then my suspicion is that we'd see a pretty strong unwinding of euro-US dollar and a move back down to the 48.40 range, especially if it's a long, flat Kumo. But price has been hanging in the upper range here since as of late. It's really trying its second attempt above 150. So with that being said, there's a potential signal on this one here. Also on the daily chart, we could have a Tenkan Kijun cross in the near future. Keep an eye. Kumo structure is supportive. Not too bad. Pound US dollar. No, we don't have any on that. I don't even want to talk about pound US dollar right now. Aussie US dollar, we've talked about this one here on the 1 hour chart. Just to refresh, look for a Tenkan Kijun cross to the upside. We're close, but we're not there yet. Kiwi US dollar has a potential as well. No, that's not Kiwi. That is Kiwi. So keep an eye on this one here. We're kind of getting in the region, and we have a very nice Kumo. And what's the alternative scenarios? The alternative scenario is very clear. Any breaks below 73.27 and closes below it suggests strong unwinding on Kiwi dollar in the short term. And the last one is on the pound yen. Keep an eye on the pound yen here for a. Is that really what I wanted to say? Okay, yeah, I guess I did. 4 hour Kumo break to the downside. Why? Because we have this nice flat Kumo for a very long period of time. So if we see a close below it on the 4 hour chart and a rejection below, we've been dilly-dallying mostly above it. But without any concerted effort, if we have a 4 hour break below it, we could see this thing drop to 146.50 very quickly. And you have a very tight stop on the euro side of the Kumo, so low risk, high reward on this one here. Okay, entonces, that is it. Eric B, a couple questions here. Eric B has a question. If someone is new, where can you go to learn about the different parts of this method? I.e. Senku Spemby, is there a book or PDF? There is one book out there, and it's, in my opinion, not very good. It's called Ichimoku Charts by Nicole Elliott. I actually find that she's actually a very good Ichimoku practitioner. I just think the book wasn't that great. If you can read Japanese kanji, there are two books out there. One of them is very hard to find. The other one's near impossible. So with that being said, unless you can read Japanese kanji, there really isn't any literature out there. And Nicole Elliott's book, I think, was overpriced, and I just don't think it really did the job. The first few chapters are good, and then after that, it completely loses track. So, yeah, there really isn't much out there. That's why I'm writing a book on it, but it's not going to be done until I finish my first book. So, luckily, those two books that are written in Japanese kanji, I have them. One of them is over 1,000 pages, so it's going to be an interesting project digesting that. And Ashi wants to know, how are my systems doing? Systems doing great. We're actually up. Cloud9 signals are up over 300 pips for the month, and it's only the 10th of November. And we've only traded 3.5-4 days of this month. So everything's just killing this month. We've just completed the Tenkan Kijun cross signal for the 4 hour Ichimoku charts. We've completed our P-bar trading EA. It's just firing on all cylinders. So that's how it's doing. So that's pretty much it. I got to go to my next spot point. Now that Aussie US dollar, if touching that cloud cross that I mentioned in the comments. No, I've given my comments on Aussie US dollar. 1 hour chart is really the only chart that I'm interested in Aussie US dollar. 30 minutes is not the chart that I'm interested in. So I think the Kumo is just way too thin. So there really isn't anything for me to do on the 30 minutes. So to me, it's not something I'm paying attention to. I'm only looking at the 1 hour. Why? Because the Kumo structure is something that I can relate to. It's something consistent. Here, this is not a Kumo structure you want to be trading with. So to me, there isn't anything there. So my comments are stay away from the 30 minutes. That's my comments. So hopefully that helps. Okay, so anybody has any questions about our services, Cloud9 Signals, private mentoring, I'm only taking 3 more clients for the rest of the year. If you're interested, you can visit me at secondskiesforex.com. And you can also email me directly, info@2ndskies.com. So until then, I bid you all adieu. I will have pictures next week from my adventures here, and I will be back in Buenos Aires, Argentina then. So I wish you all good luck trading. I always like looking forward to hearing from you. And that's pretty much it. So thanks again for coming. Thanks to FX Street. I bid you all adieu, and take care, everyone.